Hey guys, Seeney here, and welcome to another episode on the Australian Wealth Channel. And today we are going to talk about Dropbox's earnings. Okay, so some of you guys that follow the channel would know that I am actually an investor of Dropbox. I think the company is great. They're getting some great growth and they've had some great growth over the years. So as an investor in Dropbox, it's very important that Dropbox continues to do well and continues to grow in the future. So I thought it'd be worth diving into some of the reports and the results that Dropbox had this particular quarter. So before we get started, please make sure you like and subscribe to the channel. Helps to get these videos out to more people. So if you could hit that like button, that would be fantastic. Okay, so once again, Dropbox beats revenue estimates, which is fantastic. This quarter, Dropbox grew 14% compared to last year, which is fantastic. So the revenue growth this particular quarter was $487.4 million. So that's up from 428.2, which is a great result. And the company is continuing to grow at a double-digit rate. EPS was beaten by 40%, which is fantastic. So paying users for the service ended up at 15.25 million compared to 14 million for the same period last year. So those users are continuing to go up, which is a great sign. And the average revenue per paying user was $128.03, which is compared to $123.15. So the company is continuing to grow revenue off each user also. Something else that I thought that was really interesting to hear on the earnings call is the fact that HelloSign is continuing to see great growth in their business. And they're not only looking at expanding into the electronic signature space, but the company is also looking at becoming an actual platform where you can work on everything digitally in the one place. And I think that's a great idea for getting people into the ecosystem, which is something that Apple has done really well over the years, is getting people to operate within their ecosystem. So I think if Dropbox can create a suite of tools where you can just work within their ecosystem and it works really well together, that's going to create a lot more revenue growth from buying into different services, but also it's going to encourage more people to get on the platform and stay on the platform, which is great for annual recurring revenue. Because what we've seen in the last few years is that subscription model that a lot of companies have tried to go after has been a really effective tool at getting more revenue through the door. So I think this is a great move for Dropbox. So the GAAP gross margin was 78.8% as compared to 75.5% in the same period last year. On a non-GAAP basis, that gross margin was 80% as opposed to 76.7% in the same period last year. So that is also moving in the right direction, which is fantastic. Net cash provided by operating activities was $200.9 million compared to $149.7 million in the same period last year. So free cash flow was $187 million as compared to $102.5 million in the same period last year. So these are all great signs for Dropbox. The company is continuing to move in the right direction, which is what I expected. As the world becomes more reliant on cloud technology and using documents and sending files online that get larger and larger, it's going to be really important that services such as Dropbox exist. And being one of the market leaders in this area, it's great to see that they are continuing to grow and achieve great results for the company. So the total annual recurring revenue ended up at $1.981 billion, which is an increase of 49.8 million quarter over quarter and an increase of 12% year over year. So on a constant currency basis, that year over year growth would have been about 13%, because of course currencies tend to slide a little bit up and down. So overall, these are great results for Dropbox. They are better than what analysts were expecting. The stock price actually took a dive after these earnings, which was very interesting to see. And I think it provides a pretty good buying opportunity because the results were better than what was expected. So I think there's an opportunity here to be buying into Dropbox. I will actually be buying, probably by the time this video comes out, I would have already bought it. So Dropbox is a fantastic company. I have another video on my bull thesis for Dropbox and why I think that's going to be a great investment in the future as cloud becomes more and more important. So I'd be really keen to hear what you guys think about these earnings and whether you thought they were good, maybe you're expecting more, maybe you're expecting less. I'd love to hear what you thought about them and whether you think Dropbox stock is a good buy or not. So thank you guys so much for watching this. I hope you found the earnings results interesting. Make sure you like and subscribe to the channel, and we'll see you later.